Welcome to the midweek edition of Business Morning. It's 55 minutes of current and relevant business talks. That's what we do. I'm Ini John Mekwa, and we started from the global space as usual, telling you what's going on with the global oil prices. And this morning, we see it's edged lower in early Asian trade, weighed by a loosening supply-demand balance following increasing OPEC Plus output and lingering concerns over the global economic outlook. Let's look at the numbers of what this means for this morning. It's a drop, a 0.1% drop for Brent. It's at $65.62 a barrel. For WTI, it's also a drop, 0.1% at $63.32 a barrel. Both benchmark climbed 2% yesterday, Tuesday, to a two-week high, supported by worries over supply disruptions by that Canada wildfires, and also expectations that Iran will reject U.S. nuclear deal proposal that's key to easing sanctions on major oil producer. U.S. President Donald Trump and Chinese leader Xi Jinping are likely to meet and speak this week. White House Press Secretary Caroline Leavitt said this on days after Trump accused China of violating an agreement to roll back tariffs and trade restrictions, as the Trump administration pressed U.S. trading partners to provide their best offers by Wednesday. The protracted negotiations and moving deadlines have led economists to scale back growth forecasts, and we had one from the OECD yesterday. U.S. crude stocks fell 3.3 million barrels in the week ended May 30, citing American Petroleum Institute figures. Gasoline inventories went up, on the other hand, and by 4.7 million barrels, and distillate stocks rose by about 760,000 barrels. And we come here to Nigeria, where the House of Representatives ad hoc committee has called for the full implementation of a 5% users charge on the pump price of petrol and diesel. Chairman of the committee, Honorable Francis Wave, is calling for a move during an investigative public hearing on the implementation and remittance of 5% users charge on the pump price petrol and diesel. The Managing Director and Chief Executive Officer of FEMA, Dr. Emeka Agbasi, in his submission, raised the justification for the remittance of the 5% users charge to FEMA, stating that the agency has been underfunded with only the annual budgetary allocations, which provide 20% of FEMA's financial requirements. The Managing Director, Dr. Agbasi, also is asking that this be looked into as soon as possible. And away from that, Nigeria's Business Performance Index posted plus 9.78 in May 2025, marking the fifth consecutive month of growth, though down from plus 12.29 in April. The latest NESG Stanbic IBTC report highlights continued optimism despite slowing momentum. Non-manufacturing, manufacturing and trade sectors led growth. Agriculture declined 1.7. That's because of harsh weather and structural issues. Challenges included power shortages, limited financing, forex constraints, rising costs and insecurity, factors that also dragged down investment confidence and slowed overall business activities. The Association of Securities Dealing Houses of Nigeria, ASHN, is requesting a cooling-off period before the full implementation of the newly signed Investment and Securities Act 2025. The new act incorporates innovations such as digital asset, crowdfunding, and financial technology, and provides a clearer basis for regulating virtual asset service providers and digital investment products. It also empowers the Securities and Exchange Commission to prosecute and jail an erring market operator. Bola Jomali, Executive Commissioner for Operations of SEC, is asking ASHN members to study the new ISA provisions and employ professionals to enhance their knowledge and interpretation of the Act. The Public Act Committee of the House of Representatives has revealed that, according to the Auditor General's report, over 250 billion naira in public expenditures remain unaccounted for Chairman of the committee, Bamidele Salam, stated this while briefing journalists at the National Assembly. The committee is also listing high incidence of unauthorized environment, growing numbers of audit queries each fiscal year, and reported cases of more than 60% of MDAs persistently failing to comply with financial regulations, as trends which continue to erode public trust, undermine sustainable national development, and weaken democratic institutions.
Almost all tiers of government, executive, legislative, and the judiciary have, at various points in time, had to have interventions on issues coming out of mismanagement of public resources. It is our belief, because when you have a country as large and as diverse as Nigeria, you have to put some things in place to ensure that you don't allow people to commit infractions and get away with it because of the span of time it takes to track most of this expenditure. There are quite a lot of gaps. But like I've said, we should also realize that there are movements towards closing those gaps. And one of the movements towards closing the gaps is in the area of reform. So when you close some of those gaps, you also achieve a certain degree of reducing, the propensity of people to, do all manner of things untoward with public resources. And we are looking forward to more of such reforms by government, and we're sure that this kind of a conference will bring up a number of issues that will translate into greater reforms by the executive and greater legislative action by the parliament.
Well, yesterday was the last day when it comes to BDC recap. The Central Bank of Nigeria gave that deadline for operators. Officially expired yesterday, prompting renewed appeals from industry stakeholders. We know there was a meeting yesterday, and we did try to get the president of the BDC, Mr. Gwadabe, yesterday, but the network was really terrible. But thank God we do have him physically in the studio today. So we have the President, Association of Bureau de Change Operators of Nigeria, Mr. Aminu Gwadabe. Mr. Gwadabe, good morning and good to have you in the studio.
Good morning. It's my pleasure. Thank you for having me.
Great. So
and I apologize for yesterday hiccup.
Well, I mean, you've made up for it coming to the studio today. So tell us about this recap. We know the Central Bank gave it, and at some point we heard it's a threat to jobs and all of that. But what's the situation? Yesterday was the expiration, and today is supposed to be a new beginning.
Well, first I want to extend our congratulations to the Civilian Governor for the award winning of the Central Bank, African Central Bank Governor of the Year. So congratulate him. And also, to begin with, is all about reforms. Reforms are measures to ensure that there is kind of transformation. So when the Central Bank Governor announced the guidelines in 2024, it comes with a lot of requirements. Financial, corporate governance, compliance. In terms of financial requirements, it has been increased from 35 million to 500 million for Tier 1, a quantum job, and then from also 35 million to 2 billion naira for Tier 1. The categorization is Tier 1. We operate at the national level, having branches in all over the state and Abuja, while the Tier 2 will remain as a state-level operations. So that is in terms of capitalization. And also it came with AML CFT. It came with a lot of documentation, ranging from net worth, ranging from police non-indebtedness, confirmation of signature, verification of capital, a lot, before you can get the new license. Yes, like you said, yesterday was the supposed deadline. It was an atmosphere of sadness for our own members, because from reliable sources, our members that have complied are not even more than 5%. So we are talking about maybe 75 bureau de change out of 1,613 bureau de change. So it's a far cry in terms of compliance. The compliance is very slow. And this has to do with the minimum requirement. 500 million naira is a huge jump. It's not easy to come by. And BDC is just like a bookshop. Sometimes to even find investors to come and say, what is happening in BDC that I can come and bring 500 million, you know? We are not money takers or loan givers. So you see, it's just, we're just doing transactions and making our margin. So such kind of requirement put kind of concern even to the will-be investor that will come into your business. Two, the margin, all over the world, the margin of transaction is between about 5–6%. But here in Nigeria, we're talking of 1%. So that margin is also discouraging to investors to come and put 500 million, and we are saying their margin is 1%. Because 1%, I better put my money in bonds, which will give me about 27% per annum. I think that makes a better sense as an economist than to say I want to invest in a bureau de change. Also, in terms of reporting, the IT is huge. You have to integrate to the Nigerian interbank settlement system. You have to also integrate to the central bank server. You have to integrate to immigration. You have to integrate to IATA. You have to integrate to also NFIU for your suspicious transaction return. So you need a robust AML CFT platform. So all these are some of the challenges. And three, even the product, the sources. For now, you know, the bureau de change ab initio, the model was like, okay, let me license you, come to CBN and window and get money. Yeah, we know it's a crude model, but it proves to be effective for some time, and considering our own peculiarity. Right now, there is no clarity on even the business model. In our meetings is that, okay, bureau de change, you have sources. One of the major sources that any bureau de change will rely on to do this business, to be honest, is the interbank. And the issue with the interbank, we realize anytime the CBN gave a directive, there is no enforcement. As we speak, the last directive of January to banks elapsed end of May, 31st of May. I don't think there are more than 2–3 banks that comply with the Central Bank of Nigeria directive that they should be selling FM proceeds to bureau de change operators. So, and
there's nothing you can do about it?
What can you do? In fact, at the end of the day...
can't you go back to the CBN?
At the end of the day, they will say it's the bank's discretion. So what we're saying, let there be a kind of calibration. We're not saying, yes, the central bank must continue to sell money to the BDC. They calibrate, maybe intervene on behalf of the BDC.
But sometimes we hear the CBN intervenes and sells to the BDC.
The CBN want to withdraw totally and completely from intervening into the CBN window. And we believe calibration is the answer rather than total withdrawal. And three, for us, we are talking of visibility and price discovery. Yes, money requirement is important, but I think regulators, security agencies should give emphasis on reporting. We are now talking of over how many people that are operating on an unregulated space, and now because of stringent financial and prudence guidelines, if care is not taken, a lot more, about 95%, will now be operating under an unregulated space. So
okay, Mr. Gwadabe, before we get into those details, so what's going to happen now? You said just about 5% of your operators survive the recap.
Right.
So does it mean that others will merge or they'll just get off the space?
These are some of the appeal we are pushing to the central bank. You know, merger, especially in Nigeria, is easier in Europe. You see ownership succeed. In this our part of the world, people frown about coming together just because of experiences. So, but we are still advocating to our members that to look at the benefits. You know, it's an industry growth. It's a reform. So instead of you, they said at all, Nahim bad. So let us come together. But the issue is timing. We don't have much time. Yes, we are given about a year. We have seen the industry standard industry practice is about 18 months. The, what do you call them, microfinance bank, when they have to embark on their capitalization process.
The deposit bank is 2 years.
Yeah, deposit bank is 2 years. we're also talking of IT. IT structure is huge because the vision is for the upcoming Bureau de Change to operate in a digital space. All these are being put
So in your
discussion.
conversation, does it look like you're going to get a bit of extra time, even though if there's going to be an extension, we should have heard that before yesterday.
Right. I see.
Yes.
I want to appreciate the governor's passion, especially in collaboration in diversity. They have continued to engage to see where are the challenges. As yesterday, till about 11, 12 a.m., we are still discussing what is the best way forward. So we are not totally losing hope. We believe maybe before the end of today, the CBN may make an official pronouncement so that, you see, there is no reason to create tension because this is what will have happened, the unintended consequences. You know, you create tension, you create disruptions in the market. Yesterday, we've seen some positive development in the parallel market. The dollar even getting lower than about 1.6 to Naira. However, this morning, we're hearing the whole story have changed. The rates, the Naira is depreciating. So these are some of the unfortunate likely tendencies that will impact the market negatively. So I think it's good for all of us as stakeholders, as partners in progress, to look at what is best for our system and what is best for the sector so that we can move forward.
And I guess the other issue would be your source of inflow.
Right.
That the CBN is saying they want to totally stop and hand you over to the deposit banks. Meanwhile, of course, the deposit banks also have their markets. So are you also talking along that line?
Definitely, it's a huge concern because over time experience have shown there is a kind of, you know, not a mistrust, so to say, between the banks and the Bureau de Change. We have seen as competitors than complement services, and we are complementing services. And the advantage or the edge the Bureau de Change have over any other financial institution in this country is their potent and effective tool for CBN policy transmission mechanism. It's just like an interest rate. If the CBN now want to say that, okay, they want to control inflation, they will say we have increased interest rate by 20 to 25%. The same thing with foreign exchange market. It has happened. Anytime the central bank made an announcement that today we are going to intervene in the BDC market, the whole country will shiver. Those that have hidden their money, those that want to speculate, will be checkmated. And that's one of the essence of Bureau de Change, to checkmate speculation, to checkmate holding.
But I mean, there's also the perspective that the BDCs are also used in the area of speculation even negatively, and that has also affected the movement of the value of the Naira.
You see, that is a huge field. Yes, there are many players in that field. I can tell you, and it's good and important for people to know that there are licensed and unregulated players. I'm not discarding the unregulated players, because 1 out of 10 Nigerians patronize a Bureau de Change. That's the truth of the matter. So you can imagine, are we talking of over 20 million, 30 million Nigerians that have to do with a foreign exchange trader, irrespective of whether it's licensed or unlicensed. So it's understanding the reality, it's understanding the peculiarity, you understand. However, for purpose of categorization and licensing, there is difference between a licensed Bureau de Change and an unlicensed Bureau de Change. But it's all for us to have a holistic approach. We have provided so many solutions in terms of unifying the market. We are closer, we are retail end, so we know the needs of the market and we know how the market operates. Not long ago, we even recommended that the central bank should allow intertrading between Bureau de Change, because we have seen there is an intertrade. That's the whole essence of interbank market. Why can't we have an inter-BDC market? Allow BDCs that have the, you know, the capacity. Some of us want to really push the activity forward and into a standard.
All right, Mr. Gwadabe, well, we thank you for being here today, but we do hope that whatever conclusion you come up with the CBN, it's extension, merger, you know, for
mergers have been undergoing now, acquisition have been undergoing, but it needs time. It's not something that you can just conclude in a day, so that's why it's taking time. And we are praying the CBN will look into our plight and grant us the extension.
All right, thank you so much, President, Association of Bureau de Change Operators, Mr. Aminu Gwadabe, for your time, and wish you the best.
It's my pleasure. Yeah, welcome always.
All right, let's take a break now. When we come back, we'll talk about cross-border payments. Right here on Business Morning. Stay with us.
Unlocking the future of digital payment. Value of acceptance, brought to you by Visa.
Well, talking about digital payments there, well, I just came back a couple over the weekend, though. All through last week, we were at Abidjan, the AFDB, African Development Bank Group. They were having their annual meetings. And of course, everybody is talking about how Africa can connect more closely in payments and all. And of course, one of the areas that could be done is PAPS, the Pan-African Payment and Settlement System. That's one. And now we have the potential of the cross-border payments, which of course still has a whole lot of hitches still holding it. Even though from there, I learned that PAPS adoption is increasing on the continent, but maybe there's still more need for enlightenment. Supposed to be in local currencies, publicly launched January 2022 by the African Union, the African Export-Import Bank, that's Afrexim Bank. They're complementing trading. Now we hear they carry out transactions through deposit banks in different countries on the continent. This is all connects Africa. And what are the potentials of that? So cross-border payment potential is to standardize payment. If we could have that slide, thank you so much. Payment solutions to facilitate international transactions, allow SMEs to grow and engage in global trade. SMEs do not always have to remain as SMEs. And then it's supposed to enable, it's supposed to be a growth enabler. Businesses embrace digital payments to increase footfall, improve customer service, streamlined operations, bridge financial inclusion gaps, trackable financial records, improve their eligibility for formal credits and capital, and also infrastructure and trust remain crucial. So while the adoption is accelerating, gaps in infrastructure and trust still remains, unfortunately, and I guess that's part of what we'll be discussing today. Economic impact at scale. A shift from cash to digital payments could contribute between 1% and 2% boost to Nigeria's GDP annually and reduce the informal economy by up to 13%. Well, let's find out the reality of this now with Senior Manager, Tax Regulatory and People Services Decision at KPMG, Toya Akimboro. Mr. Akimboro, good morning and welcome to the program.
Thank you. Good morning, viewers. Thank you for having me. It's a real pleasure to be here.
Good to have you. So, I mean, we've been hearing about PAPS, launch 2022. Well, I heard that now they're taking it down to the different countries and working with deposit banks. But from your perspective and your knowledge, how much adoption would you say PAPS is helping trans or cross-border transactions?
Okay, thank you for that question. So just to give some context, we have 54, or depending on who you ask, maybe 55 countries across Africa. And for the purpose of this conversation, I would aggregate them into two classes. So those that are standalone from a payments perspective, so countries like Nigeria, countries like Congo, and those that are part of a regional collective. So French West Africa, the Southern African Development Commission, and the East African Community. So give or take, there are about 28 countries in those regional ones, and those are connected in their regions from a payments perspective. But for each of the other countries, we are standalone, we are all independent. Our payment systems are not connected. It's very hard to send money across borders, right? If a transaction is generated in dollars, it goes to the US first. Can you imagine that? And then before it comes back to Africa, so pushing up costs. If it's euros goes to T2, European Central Bank's payment system. Now, PAPS is solving that problem, because what PAPS is doing is that it has set off what I'll call a backbone, right? A settlement system to enable Africans send money across countries in their own currencies, right? So sitting here in Nigeria, if I wanted to buy something from, say, Dar es Salaam in Tanzania, all I have to do is go on PAPS, pay in Naira, and then the merchant in Dar es Salaam gets the payments in their currency. That said, PAPS is still rolling out. I think they are currently in about 13 or 14 countries, and at present they are onboarding 4 more. That may sound low, but it's not really low, because I mentioned there are regional collectives. So in West Africa, there are about 8 countries in the BCAO, that's the central bank for those countries. In Cyprus, there are about 15, 16 countries. And then in East Africa, there are 4, and they are currently onboarding Burundi. So that means that in one fuel swap, once PAPS connects with the BCAO, connects with Cyrus, and then with the EAPS, across Africa, all of a sudden, we'll be saving millions and millions in transaction cost, and saving a lot of time as well. So yeah, PAPS is definitely solving our problem of intra-African trade and payments.
But is PAPS the only solution that we have now?
So to put it like this, the fintechs, of course, are doing great work in that space, and then of course the Pan-African groups, so Standard Bank, EcoBank, UBA, Access Bank, within their systems, they're doing a lot of great work. But where PAPS is unique is that it is actually the back end that PAPS supports, right? Yes, when the payments are done, there will still be dollars, because the final settlement in PAPS is done in dollars. So to put it like this, whenever we last mile customers, when we do anything, at the back end, there's still a settlement leg that we can think of that as the final value transfer. What PAPS has done is that PAPS has set a framework, right, for that value transfer. Previously, it has to be done typically through correspondent banking. So banks send messages to each other through SWIFT, and then later they then move money around. So yes, there are other solutions, but none of them is as far-reaching, and none of them would revolutionize African payments the way PAPS is promising to. And remember, PAPS is not actually a last mile. So you and I, in a matter of speaking, we don't really see PAPS. It's at the back end that PAPS stops. Of course, it's an initiative of the African Export-Import Bank. So they backstop all the value that will pass through PAPS. So PAPS, to my mind, just speaking as a neutral observer, seems to be the most far-reaching and what's comparable to the T2 system, Target 2 and Target 2 securities that they have in Europe, and CHAPS in the UK, and maybe FedWire in the US.
And yet, even PAPS has to deal with insufficient infrastructure on the continent.
Absolutely, absolutely. The payment system is filled with a lot of challenges, but to my mind, it also means lots of opportunities. But yes, some of the infrastructure is our economy is, like you mentioned, very, very cash-driven. Of course, there are a few exceptions. In East Africa, they have the M-Pesa across Kenya and a few other countries, but largely across the continent, it's cash-driven. So infrastructure have to be put in place. Retail payment solution that would help last mile users like you, I, and the viewers at home to actually utilize, to be able to utilize the solution that PAPS is bringing on ground. Again, African countries, we have 54 countries, right? With different laws, different rules, and there are specific things that need to be present in the country for the payment system to be effective. So rules around finality of settlement, around enforceability of netting orders, and a couple of, interestingly, in Nigeria, we don't have a Payment Systems Act as well. And in fact, it was only when the Investment and Securities Act was enacted, and I was looking at it and I saw some provisions on payments, and I thought to myself, well, if we don't have a payment systems act, at least let's get it through here. So that's something else that needs to be done. Even the legal, if I can use that term, the legal infrastructure, right? The regulatory framework. It's lacking across Africa. It's something that needs to be done. I'm aware that some work is being done, of course, through the one of the protocols of the African Continental Free Trade Agreement, but a lot of work needs to be done. And then just the technical infrastructure as well. And when we're doing some work, I was aware that some of our neighbors in West Africa, and there's this thing called the real-time gross settlement. It's a model that central banks use. And some of our neighbors here in West Africa the central banks don't have RTGSs, right? And then thankfully the World Bank was helping them finance some, but yes, a lot of investment has to be made and infrastructure put in place to make PAPs effective.
And I guess another area or incentive to PAPs and any other system, you know, for the continent would be charges, the costs.
Yes. So the truth is, out the gate, the charges and the costs, the transaction costs that PAPs brings, it's very, very competitive. You know, I sort of touched on the fact that today payments, intra-African payments, is done through correspondent banking. So to give you an example, if I wanted to buy something from a merchant in, say, Johannesburg in South Africa, and I went to a bank in Nigeria, right? Let's assume it's not a bank that had any branch or any connection with South Africa. What would happen is I would give the instruction. The bank would instruct their correspondent bank, sometimes first in London, and then if it's a dollar transaction, then in New York, before it then comes back to Johannesburg, right? So imagine the cost, and each of those legs, there are charges, and then of course the transaction time as well. PAPs takes all of that out. So with PAPs, if I wanted to buy something from a merchant in Johannesburg, I'll just go to my bank. My bank would correspond straight with the bank in South Africa. And then, so yes, there are still charges, but compared to the costs and the timing associated with correspondent banking, it's really, 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 really very much efficient. It's much better.
Yeah, I mean, that picture you painted is a sorry state for the continent. I mean, if I want to pay for something in South Africa, and it has to go to New York and go around before it comes back to Africa. No wonder even our aviation is suffering it. Landing charges in Africa is more expensive than landing in a country like Paris and other more developed countries. So obviously this has to be dealt with. But, you know, even after dealing with all of this, one of the competitions we had in Abidjan is the enlightenment and knowledge of it, even among Africans. So sometimes things that are beneficial are in existence, but how many people know about it? Especially when you look at the fact that on the continent, a larger part of the economy is informal.
Absolutely, absolutely. Well, it's a challenge, and I mean, it's some of the unique challenges that we have in Africa. And like the way I like to think about it is that wherever there are challenges, it means that there are opportunities, right? There are just opportunities dressed up as work. But yes, let's give ourselves some grace, right? We are on the path. Thankfully, the team at Afrexim Bank, they've conceptualized this and they've come out with it. And it started only in 2022, like you mentioned. In comparison, Target 2, the first iteration in Europe was 2007. And that's even that, and it was a successor to the payment system that they had, right? So when they moved to a Euro-wide payment system that was connected by RTGS was 2007. So let's give ourselves grace. I'm aware that the guys at PAPS are also thinking through innovative solutions. They're putting together something called the African Currency Marketplace. So in addition to payments, there will be sort of a barter system for conglomerates and for businesses who have currencies in one country to translate it to currencies in the other, because many of our currencies are not convertible, right? So instead of first moving to the dollar or the euro, if I had naira in Nigeria, I could then trade it with a merchant in Kenya for shillings, right? So let's give ourselves some grace. It's been 3 years. They've done a lot of work. There are already 14 countries, 4 are currently onboarding: Egypt, Comoros, and 2 others. With time, these things will be resolved, and we'll get there. We'll get to it will be Ururu.
All right, we pray. And then the potential we see is Visa is projecting that a shift from cash to digital payments could contribute about 2% to GDP and also reduce informal economy by up to 13%. What projection do you see? I mean, talking about PAPS, and from your perspective, I guess we're making some good progress on that. If we could accelerate this, what are some of the potentials that you see concerning this cross-border payment, where mostly PAPS, but I mean, it's good to also have alternatives?
Yes. So yeah, thank you. So maybe it's just a disclaimer. I'm a lawyer, so maybe numbers are not really my thing. But that's on a slightly light note. But your numbers, to my mind, they may even be understated, because what happens with some of these things is that the growth is much more geometric and exponential than arithmetic. So if in Nigeria, for example, the unfortunate cash scarcity that happened about 2 years ago actually moved a large chunk of our population, moved some of the unbanked people. And if the plans and the strategies that have been set up by the Central Bank of Nigeria work, the knockdown effect on the economy might be much higher than this. And just to mention, PAPS is a backbone, right? PAPS so what PAPS does is, we can think of it like a framework that gives opportunity to many entrepreneurs and to many opportunity-seeking people to create solutions off the backbone that PAPS has created. In fact, I was teasing one of my friends today, saying that thinking about PAPS is like a jet engine in a 1996 Toyota Corolla. The jet engine is working well, but the body is still quite, it's not what it should be. But we'll get there. And I'm sure that PAPS would even give us way more benefits than the numbers that you've highlighted.
All right, let's stay optimistic and hope that, the things that divide us on the continent will not disrupt the growth of PAPS and cross-border payment. Thank you so much for your time and your optimism, to the conversation. Toya Kimbero, Senior Manager, Tax Regulatory and People Services Division at KPMG.
Unlocking the future of digital payment. Value of acceptance, brought to you by Visa.
All right, we always talk money, yes? So now let's talk about why are deposit banks mostly do not seem to be empowering small businesses. I'm not going to put my guest on the spot because she's not inside of the bank, but we have with us right here the non-executive director at Wema Bank. When we hear a bank, our head just goes up, and we want to ask you all the questions we've been keeping. She's also an executive coach. She's Mrs. Bola Matel Oko. Mrs. Oko, good morning and welcome to the program.
Good morning, and thank you for having me. I'm super excited to be here this
morning. Great to have you.
Yeah.
So, I mean, just we understand your perspective, but we're just curious. Why is it that banks do not like small businesses?
It's not that we don't like small businesses, I assure you, because, small deposit banks at their core they form the bedrock of the financial system. And basically what we do is to mobilize deposits from the public and channel it towards productive parts of the economy to be able to, and we do it through lending. And you know, lending is a very complicated process. But I think one of the things that we've been able to do is to come up with flexible programs that would help small businesses. So,
and women businesses.
Women businesses, so yes. And I think that if you look at Wema Bank, for instance, we have a product specifically tailored for women businesses called Sarah by Women, which offers the necessary support and guidance for female businesses and SMEs to be able to grow. But there are a lot of significant challenges that these businesses face, and I would highlight some of them. So for instance, we have a lack of proper documentation, proper documentation and structure, which is very key to be able to get any kind of funding. So you find that a lot of SMEs, female businesses, they're one-man businesses, they don't have the proper documentation, they don't have the structure that they need when they actually apply for funding. The other thing is that there's a lack of financial literacy. So for a lot of them, they don't really know about the structure that they need to have in place, which is really more about, not just about understanding loan documents. It's really understanding the cash flow, how to budget and all of that. And one of the things we do with Sarah by Wema is to educate them about this, so that when they have the necessary education, they are a better position to be able to get funding.
I do know, and I hear of some programs by banks who go above, you know, just the financials to try to educate and enlighten, especially the women and the youths, you know, on bookkeeping and all of that. And I'm wondering if that's making any difference to the ecosystem.
It is making a difference because, like I said, if you look at our own program, what we've been able to do is not just focus on like the metropolis. We actually go into like local areas.
You do it in languages?
We do it in languages, and we educate the women. And over the last few years, you have seen it make an impact. So these women, they are now, they understand that it's not just about running a business. There are certain things that must be put in place to make my business run more efficiently. If I want to be able to receive funding, I have to be able to do better as far as putting together my paperwork and the structure and the processes that I have for the business. Because at the end of the day, you have to remember that banks have to be able to have economic health, as I call it. So we have to be able to sustain our economic viability. So we have to be able to have guidelines to bring funding. But what we've been able to do, like I said, is to give these women the tools that help them, that position them better to be able to do so.
And I guess that's where your role also as a coach comes in.
Because one of the things I've seen when I talk to people, female entrepreneurs, is that there's so many things that they need coaching on. So whether it's strategic vision, because when I talk about vision, vision is really kind of what do you want to do. So for a lot of them, we have to talk about strategic vision. We have to build leadership capacity, because running a business is about leadership capacity. You have to be able to build capacity. I run a business too. Then we have to build resilience, because any business at any point in time may suffer some setbacks. So it's about building resilience. It's about cultivating self-confidence. You'll be amazed that even the most successful business women, they suffer from what we call imposter syndrome or self-doubt. And as you scale your business, these are all things that become a reality. So it's really very important to be able to get some level of leadership building or capacity towards that, which is where coaching comes in.
So I hope that the color is changing. They used to say women don't support women.
Absolute myth. Absolute myth. You know, it's so interesting because I have an executive community of women. And one of my mantras...
That's a community of executive women?
Yes, yes. And one of the things I say, one of my mantras in the community is that this narrative that women don't support women, it's an absolute myth. You know, I have in my own life, I have many women that have supported me, that continue to support me, and I have tried to provide the same kind of support for other women, not just as a board member, but as an executive coach, because I understand firsthand the unique challenges that women face, whether it's as an entrepreneur, whether it's you're sitting on the board, or whether you're managing a business. We have unique challenges that we face, and these are all the things that we address when we coach.
I guess the thing with women is you cannot always just look at the finance or the hardware, I think I like to call it, because women always have to remember the home front and prioritize that. And so even in your search for finances and career, that also comes, and you have to handle it, which is something that most men do not have to deal with.
Absolutely, but I also want you to appreciate that when you empower a woman financially, it has a direct and positive impact, not just on the family, but on the community at large. And you know, in the last few years, there's been a serious reversal of roles, because it used to be the norm that it's the man that is the main financial provider for the home, but all these things are changing. And so we cannot just say, okay, women, your focus is to raise children, and so we don't need you to be financially empowered. I mean, right now, I have gone through a stage in my life, all my children are adults. And so if I did not take the time to empower myself, now that I want to do some things that I'm able to do in this season of my life, then it will be a problem. Because think about it, you will not always have to mother for all of your life. There will be seasons of your life where your children are grown and you can do what you want to do. And so that's why it's very important to create the opportunities for women to be able to do that.
So you have to get empowered, get the knowledge before the children do not need you anymore.
Absolutely.
They will not always need you.
Absolutely, because, I mean, all my children are out of the house now. You know, so one of the things I've been able to do in the last few years, and I think COVID was a blessing for a lot of people in that regard, because we were home, so we didn't have to have that choice of going to work and having to leave our children. A lot of women that I know, I got my executive coaching certification during COVID, because all of a sudden I found myself, you know, in the house doing nothing, and I thought to myself, you know, why not do something that after COVID can become a value to other women? And so that's exactly what I did. So, you know, things are so different now because of the way that the internet is. You can be a stay-at-home mom and become a financial guru. I think, I forget her name, the lady who started Spanx. She started it in her kitchen. She was a housewife. And today, Spanx is a multi-billion dollar business. So all these limitations that we feel we have as women, it's really not a limitation. A limitation is only a limitation when you see it as such. So that's my personal philosophy.
All right, so let's end where we started from, in the banks.
Yeah.
We see the change. You talked about change of roles. We see a lot of executive women in the banks. I mean, you are also there. But is it changing the narrative? Is it bringing the womanly face to requirement for loans and funding of businesses?
So I think it's we need to keep educating the critical decision makers, right? So for instance, when I got on the board of Wema Bank, I think there was only 2 women in executive. There was 1 woman in executive management, and I think there was 3 women on the board. But now we have more women on the board. We have more women in executive management, and they're able to bring the unique perspective, because it's really about unique perspective, that about the challenges that women face. And I think it is making a difference. It is making a difference. We're seeing more women in management roles. I think for the first time in Nigeria, I would say almost about 5 of the major banks have female MDs. So we are making progress.
Okay, we are
absolutely making progress.
Yes, we are, certainly. Thank you so much. Mrs. Bola Matel Oko, non-executive director at Wema Bank and also an executive coach. Thank you for your time.
Thank you for having me, and it's been a pleasure.
Same here. All right, just before we go, let's tell you a little bit of what's going on outside Africa. We start from the United States, where President Trump has doubled tariffs on foreign steel and aluminum imports to 50%, pressing ahead in the face of criticism from key trading partners, with a measure that Donald Trump says is the intent to revive the American industry, whether the world likes it or not. And after imposing and rapidly lifting tariffs on much of the world, only to reduce them, Trump last week refocused on global steel and aluminum markets and the dominance of China. And closely related to that, the UK has a bit of relief. 5-week deadline to finalize a trade agreement with the US after President Trump spared that country of the steel and aluminum exports from doubling. So the 50% does not connects or does not affect the UK, but they have 5 weeks to finalize their trade agreement, else we don't know what President Trump might do to them. To Russia, the Russia services sector has experienced its fastest expansion since January, according to a business survey that was published today. The growth, they say, is driven by increased demand and a rise in the new orders. But we hear that some other parts. So while the defense or the defense industry in Russia is growing because of the war going on in Ukraine, other parts of the economy in Russia is not doing so well. And in Germany, the cabinet is set to pass a package of tax breaks for companies, and it's going to be worth about 46 billion euro. That's supposed to be today. It's part of a broader push to revive an economy that's forecast to stagnate for a third straight year. This year, 2025. In Australia, the economy grew less than expected in the first quarter. The Australian Bureau of Statistics said that growth stalled amid the simmering global trade tensions. The economy grew by 1.3% year on year in the first quarter. That's lower than what was expected. What was expected was 1.5%, according to polls before this. And Tesla in Australia sales soar in the US and Europe, but it reported bright spot in Australia, where its electric vehicle sales rebounded to their highest level in nearly 12 months in May. And the American EV maker said that its vehicle sales jumped 3,897, primarily driven by record sales of its recently revamped Model Y compact sports utility vehicle. That's in Australia. And still in the automobile, shares of Toyota industry slumped as much as 13%. That signals investors' disappointment over Toyota Group's reported 4.7 trillion yen deal to take over the company private. And I'll leave you with this, maybe not very businessy, but something you should look at. Japan's fertility rate declined in 2024. That's for the 9th consecutive year, reaching another historic low that underscores the immense challenge facing the government as it attempts to reverse the trend in one of the world's most aged societies. So while Africa has a youthful population looking forward to the future, in Japan they're trying to boost their youth, but their birth is reducing. What a reverse, you know, for the two parts, Asia and Nigeria, or Africa, beg your pardon. But that's it on the program. Thank you so much for being a part of Business Morning. I'll see you tonight for the stock market report. Ladi will be here 1 p.m. with Anita Ede to give you 55 minutes of updates from the world of business. I'm John Mekwa. Do have a great day.